Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Welcome, Art Jarvis. How are you?
Fantastic. How are you doing?
See, I know, but with the glint in your eyes and the smile on your face, that fantastic is even more so because I think we can both say that we're feeling pretty confident and optimistic after. I mean, this is Tuesday, the 21st of January.
Yeah.
24 plus hours after the inauguration of President Donald Trump and Vice President J.D. Vance, and so we're feeling a little optimistic. If I put words in your mouth, are you feeling optimistic?
I am. I think I think I mentioned I was already pretty positive about 2025, and things that have occurred over the last couple of months have just added to that. I think we've alleviated some things that I might have been concerned about, or taken a little bit of pressure off, and such as taxes and things like that. Right. So I'm my normal caveat is what? As long as nobody does anything stupid, right?
That's it. Well, I thought the other one is fear and greed drive the market. So
there's that.
I think it seems like there's a little bit of relief from any idea of fear right now of things. I mean, it's happened. The election took place, the person was elected, the inauguration took place, and so now here we are 24 hours. Yeah. So your other thing, like you said, the caveat is as long as nobody does anything stupid.
Which they will.
Here we are 24 hours after, and some people are already saying some stupid things are happening, but we won't go there. So episode number 42 of Taking Stock. We're underway here, my friend, and it is good to have you back.
Good to be here.
And it's good. Thank you. You always say, I'm going to say it going into this one. You always say, you have fun with this, and I appreciate that. Yeah. So it's a comfort zone of some sort. Hopefully we give some good insight as to what's happening, and maybe even somebody picks up a cue of a tip or some advice regarding their personal finances or investing or whatever, what's happening in the economy. But I will say this, so I enjoy this too. So
I'm glad.
Just so the listener.
Yeah, there's a saying. There's a lot of sayings in this business, but the markets climb a wall of worry. So if we do nothing else here than try to alleviate some of those worries, or maybe even some of those unnecessary worries, then we're doing our job. Sometimes the best thing you can do is try and talk people into maybe doing nothing.
Well, maybe making it a hill climb instead of one of those rock wall climbs.
Yeah, exactly. Yeah.
I don't know if you've ever done one of those wall climbs or not, but we don't want to go down there.
Not recently, but yes.
Well, that's a different story.
Right.
But anyway, so, again, inauguration took place yesterday.
It did, yeah.
We're a little late to the party on our normal recording time on Tuesday because it's about 5 p.m. As we sit in Studio A recording episode number 42 of Taking Stock, the second episode of 2025. However, what are your thoughts? In the 24 hours since the inauguration took place, and obviously there have been some executive orders signed, and how's the market reacting? What are you seeing or feeling yourself?
Yeah, well, let's start with the markets. I mean, the markets are positive. We finished last year at 58.81, if I'm not mistaken, on the S&P 500. Today we're well above 6,000. Today we finished up another almost 0.9%. So the S&P's at 60.50. Wow. So we've already risen a big chunk of 200 points here in the first whatever number of trading days there have been this year, with a couple of days off. We had Jimmy Carter the 9th. We had Jimmy Carter's. And the markets were closed in honor of him, and And then we had Martin Luther King Day yesterday, so we've already had a couple days off this year.
Quite a day yesterday. With it just happened to be the combination of Inauguration Day and Martin Luther King Day, by the way the calendar fell.
Right.
So it was quite a interesting pairing.
Yeah.
Of and the thing that I found interesting already today, though, if I can say so, is I didn't see some kind of anything that I would call a real reaction in the market today specific. Did you feel like the market did anything today that was expected or unexpected? Or
well, I think the market being up 0.9% on top of what it's already up this year, I think that's a positive sign. So a lot was said and a lot was done yesterday, and at this moment in time, the markets seem to be reacting positively. Things that were done, there's going to be some follow through on that, and then a lot of things were said. So the question is a couple of people made comments, and my response to them was the hard work starts, and that's true.
Right.
I have my feelings about what I would like to see come from this administration, and not necessarily economic goals and things like that, more societal goals and things. But the hard work starts now. But in general, I think I was already looking at this year being a decent year, and with the party that was elected. That alleviates some tax concerns, I think, as long as as always, as long as you can get things through. That they tend to be more pro-business, so that would add to it. So I still think this could be another good year.
Well, that's a good topical starting point for today. The potential changes in do I want to say tax laws or tax policy? That's probably the better way to say it. So the potential changes in tax policies and some things that have already been signed off on and stated by the new administration. So how does that work? And I think everybody knows, like you said, tends to be more pro-business. Let's talk a little bit about how that impacts the whole tax picture for each of us as consumers and as investors, living within whatever the economy is and living within whatever the tax laws are.
Sure.
What do you say?
Well, I mean, from an individual standpoint, if I'm going to pay less than taxes, that frees up maybe some money for me to spend, and you have a money multiplying effect of I spend $1 and that dollar goes to the next person and that person sends that dollar. So you have a multiplying effect. So the fact is that those dollars may have a higher multiplying effect than they might have had, So going forward, that multiplying effect should have a more positive impact on the economy. We don't talk about it a whole lot, but we have a national debt that's now at $36 trillion, and there has been some discussion about trying to carve some of that down a little bit. Interestingly enough, in the last 12 months, so through the end of December, the national deficit grew by 40%. The national deficit, the
calendar year 2024.
Yeah, that's a big move. That's a lot more.
What was
debt
it again? How much?
It was up 40% from in 2024. So so we need I people ask all the time, where do you think we are? Where do you think this is going? And I'm not smart enough to tell you when the dam breaks, right?
You would have been sitting beside Donald Trump. If you were that guy, right?
I'm not sure where I'd be sitting.
I'm just saying those are the guys that he wants right there. The guys that's smart enough to say here's where it's going and here's how we get it.
Or think they're smart enough. Again, I think it's a healthy discussion. There was a $2 trillion number thrown out there, back in the late last year, and if we cut $2 trillion off our debt or something, that's not a negative thing. It's also not an easy thing to do. I mean, you look at a country like Greece that several years ago went through some austerity programs, and there was rioting in the streets. Right? It's not, people have gotten used to a certain level of money flowing in a certain direction, and when you start talking about maybe potentially cutting that off, depending on what you're actually looking at, it's not going to be an easy process even if they try to do it. But I think I was stunned by that 40% number.
Right.
A 40% increase in our debt, not our debt, but in our budget deficit in 1 year.
Well, especially when you're talking about the trillions of dollars, 40% of some number of tens of trillions of dollars is a big number.
Well, that's
a big number.
Yeah. And we've talked a lot.
We talk about that. You showed me, the debt clock or whatever it is. That's crazy. That's just crazy.
Yeah,
I'm sure people that are listening have seen that too. Yeah. It runs faster than anything I've ever seen.
Yeah, it runs like a buzzsaw. Honestly, it's moving, and that's a hard thing to slow down. And we've talked about how the inflation we had in 2022, and now we've had several rate increases. We've had a couple rate decreases, which we might go into that. We might not, but our cost of servicing our debt because of those increases in rates, that 5% increase we've had in rates, that adds a substantial amount of stress to our system because we're not doing whatever it is 2% interest rates now. We're doing 5%, and that our cost of any new debt that we put out there, it's expensive. Right. And now it would have been nice if we were fighting this back when interest rates were really low. We potentially would have been easier for us to accomplish some things, whereas now, because of the higher interest rates, it's just going to be all that much harder to deal with.
Right. So. Well, we started to cover a couple things there. After starting with a question about the impact of lowering taxes on businesses,
right?
And in the campaign rhetoric that led up to the election, which led up to yesterday's inauguration of a new administration, and some changes in how taxes are going to go. In that campaign rhetoric, you would have heard, as I did, we all heard. Well, yeah, if he gets in, he's going to lower the taxes on the rich, and then you, me, and whoever else we call, let's say, middle America.
Middle class,
yeah, middle America, middle class Americans are going to bear the tax burden. So I'm going to ask, I'm going to put you on the spot. We just talked about it, and you answered the question and said, it's going to mean this. So that debunks the myth. It is a myth. Lowering the taxes for businesses, lowering the tax burden on corporate America has a positive impact on middle-class Americans.
Sure.
Why?
Well, so let's start with the company. If a company is less concerned about a number of things, but in this case taxes, they're more likely to do more capital projects. Their weighted average cost of capital is less. They're some of these things, and it's already happening. It's been happening for a couple months now. When you talk to some of these salespeople and people that are in certain businesses, they have already seen a big wave of new orders and things like that because these companies have become more confident in what they're able to do, and they're not going to get hit with health care or surprises from a tax standpoint. So that carries over. So now you're not only let's say you're opening up a new line or you're some new kind of distribution center or whatever that project is. Theoretically, that adds people, right? So if you're adding people and more people have jobs, that is a good thing, but I mean, I'll still say that the thing that's going to be of, we talk a lot about it, is inflation. So what's that do to inflation? Okay, so we got to keep an eye on that. I've already expressed my opinion about the rate cuts we had last year. I don't understand them. I mean, maybe 1/4, maybe, but we've had 0.75%. And we're already still worried about inflation. We haven't killed inflation. We're at 2.9% on inflation. They still say they want to get to 2%. Then why are we pumping money into the economy? And then you start to talk about tariffs, and if you look at tariffs from a historical standpoint, they have not been inflationary. There's things you need to do, but the trick is now inflation being too many dollars chasing too few goods. If you're taking goods out of the system, now theoretically that can cause some inflation problems. Now he's talking about whatever he's talking about.
Again, just to reiterate, so too many dollars chasing
too few goods.
Too few goods.
Right.
Right. I mean, again, to reiterate, too many dollars chasing too few goods, and tariffs could potentially mean even fewer goods.
Correct.
And so that's where you got to keep an eye on it.
Yeah, but that's a very simplistic way of looking at it, because there's a lot of variables go into.
Well, I want to complicate it.
Okay.
I don't really want to, and I don't really think this will complicate it. But at the same, you're talking about, because we start with the focus on, some lower taxes for businesses, and that would include, the manufacture of goods. And ultimately companies, businesses that are selling goods here in the States. So tariffs on outside entities, from other nations who are trying to, import goods here. And we're going to slow that down. But with the lower taxes and allowing some, like you said, some more projects and things, can maybe create more goods here locally, right?
Yeah.
So, I mean, is there a balance? Does that really truly represent a balance at the end in your eyes, or it just needs to be watched?
It needs to be watched.
Yeah.
Okay, you need to keep an eye on that. And again, that's why I keep reiterating my concerns about the rate cuts we had last year. It's like that makes me nervous. I guess is a good way to put it. It's something to keep an eye on. The nice thing is pandemic is the exception, but no one walks into a room and turns the world off or turns the economy off, right? It's something that you keep an eye on, and the trends will start to show if there's a problem. But and you mentioned even if the concern was not necessarily that we want rate or tax rates to be lower, maybe it's just that now we're not concerned that tax rates are going to go up. So if I want to spend the money that's needed to expand on whatever that means, if I don't have to worry about going from a 35% tax rate to a 40% tax rate, makes a big difference, right?
Sure.
If my cost of health care for employees and things like that is not going to go up drastically, that makes me more comfortable in doing what I'm going to do. But once again, then you do this expanding, there's that multiplying effect of, you got new lines, new employees, more people with money, more people spending money. That multiplier effect continues to grow bigger and things like that. And Trump's talking about 25% tariffs on Mexico and Canada, right? Well, I don't think it's like any great observation that he likes to negotiate, and I would call that a starting point for a negotiation, or to even just bring people to the table, right? So,
well, he gave that some definition yesterday, which I thought was interesting along the way, and I think you and I both watched a lot of the inauguration proceedings and heard a lot of the questions that were posed to him and his responses. And I thought he brought some clarity in talking about the tariffs. At least I hadn't heard this before. So, 25%. But, it's not like I'm going to say, and he even talked about, and Canada's, guilty of some things too, and yada, yada. So, yes, 25%. But that's like, if they don't do this, but if they do, so it's like there's going to be tariffs. They're going to, the rest of the world's going to pay its fair share. Right. Why should the United States? Everybody's making money off the United States. I mean, he kind of said that, and he said, "I'm not going to tell you who isn't, because there's a couple places." Did you hear that part? Yesterday?
I did. I missed that part.
Yeah. Well,
I was probably watching Ohio State.
I found it really greatly amusing. Now this was earlier. Anyway, it was very amusing. I did hear him say, and I'm not going to quote him absolute verbatim, but the gist of it was he said, everybody's making money off us.
Yeah.
And why should they, and why shouldn't we make some money off of them? He goes, well, not everybody. He said, there's a couple places, and he said, I'm not going to, because he started to say, he's like, and he goes, no, I'm not going to say, because then they're going to start trying to make money off us too, so I'm not going to say. But the point being, going back to the 25% tariff, since that's where I started, and where you left off. As you said, master negotiator, 25% is the number. Let's get to where, okay, we have a fair tariff. Yeah. But he actually gave some clarity saying, that's only if. And so, but there's going to be tariffs, and whether they're at 15% or they're at 5% or whatever I don't know. Those are things that those guys know. I have no idea. And maybe you know some of that. But, anywhere from, 0 to 25, whatever the number is. But, the threat is real. You need to do these things, because we're not going to just let you take advantage of us anymore. So,
it's in my opinion, it's all about bringing companies, countries, organizations to the table, and let's talk about this, right? Because Father always said, "Who told you life was fair?" But you can be more fair. Right? I mean, you can work on something. You can come to a table, and you can come to an agreement that makes more sense than what we're dealing with right now.
Right.
And don't forget, our biggest trading partner is Canada, right? Right. We right across that bridge,
Which is why I think he was. Trump was quick to say, even Canada, because I think people know, they're. I personally, I'm a little bit maybe naive in the situation. I just always think of Canada as like they're a great friend.
Yeah. And they are. They are.
Right. Yeah, except for doggone them.
We're tight.
Doggone them. From what I understand now, they're not as good a friend as I thought they were.
Yeah.
They're taking advantage of us too.
Everybody has their goals and their needs, right? But it's. Don't forget, it's not. We're not the only one that can raise tariffs. Okay, there's a such thing as retaliatory tariffs, right? So, okay, you're going to raise ours on this stuff. Okay, we're going to raise your on these things. So,
which brings us back to your point of let's get to the table.
Yep.
Let's bring people to the table. And talk and figure out. One of the things that's interesting. We don't have to talk about this, but one of the things that's going to be interesting to watch play out is the whole TikTok thing.
Yeah. And
what? I mean, it's going to. The answer to that is they're going to sell it to an American, right? And
more likely.
Something like that.
Right.
It's going to be a sale,
sure.
And that's how the resolution is going to come. But it's going to be fun to watch that.
Elon can buy it.
Well, that's what everybody's saying. That was a big speculation remark yesterday. Well, like I said, I don't want to get into the whole TikTok, but it's just going to be that's an interesting side thing. Bringing us back around to economy and investing. Lower taxes on businesses, or as you said, which I think is a great point, not necessarily lower, but a relief of they're not going to raise. Right. We can plan to do our business this way, knowing here's what our burden already is, and so we can make plans and go forward. For investors, does that bring higher stock values to the companies?
100%.
Yeah. So I mean, I wanted to get us there to talking about the investment aspects, because it's not just less taxes and tax savings. it has a really snowball rolling effect and impact on a variety of different things. Yes.
Yes, and what I would really, I think, this is one point I really wanted to make today is I still think, technology sector last year was the leading sector, and there was a couple names in there that just took that part of the market up, but my hope is, and what I'm looking for, and the way I'm kind of making some small moves in portfolios, is to see a more broad-based increase in our markets and in our economy. It's not just, hey, it's all about technology. We've been through that before, back in 1998, 1999, dot-com bubble and things like that. Yeah. We don't want to get too far ahead of ourselves on this part here, because we've seen what that can do. But there's a whole bunch of neglected sectors, maybe financials and healthcare and industrials and things like that have been neglected, but hopefully now that we're seeing more, we will see more confidence from different sectors that will see not only it won't be one or two sectors that lead the way. Hopefully, it's 6, 7, or 8 sectors that are really the big going forward. So that would be my hope. That is kind of the big thing I'm kind of looking for this year. I'm not going to ignore technology because I still think technology's got a way to go. But if we can pick up, if we can make some money in neglected sectors, that would make me very happy. Let's put it that way.
Well, and you alluded to that pretty strongly in our last episode. So obviously that's a focus for you, for your investors, for your clients. So that makes sense to be hoping to see that be a wider. I mean, I think anybody that would want to take that wider view look. So that makes sense.
Yeah.
That makes sense even to me, and I don't know.
There you go. Well, it's one way of looking at it. We'll have this discussion in 12 months, and we'll see where we were. But
which brings me, and we're just a couple of minutes away from bring episode 42 to a close. So I'm going to throw that tease out. So our next episode, 2 weeks from today, and that's going to bring us into the first week of February, whatever that Tuesday is, or maybe the last day. What's today?
Today's 21st.
21st. So 14 days will be the 35th. So,
so
somewhere around the 4th of February.
Based on the weather, it already feels like January.
Oh my gosh.
January 45th. So
right. Yeah. We're into what we normally feel in February / early March or whatever in Cincinnati. But anyway, so the tease is, and I asked you this, offline before while you and I were just talking. So our next episode around the 4th of February, whatever that Tuesday is, without looking at a calendar right now, we're going to get Art's preview of 2025. Just like we did in 2024. And so when you just reminded me when you said in 12 months from now we'll look back at this.
Right.
Well, in 12 months from 2 weeks from now, we'll look back at what you say 2 weeks from now. So listeners, be prepared. You can compare your notes, whatever you guys are predicting, and Art's going to tell us what his forecast is for 2025 and all of those places, inflation, economic growth, and everything. So give you an idea.
All those fun economic numbers, right? So,
well, the key word though here is it's fun. Nobody's going to hold your feet to the fire over your forecast 12 months from now. We're just going to have fun looking back and say, how close were you?
I may have a few clients that might hold my feet to the fire.
And maybe some of those clients are listening, so I can't say none of our listeners are your clients, but, I know you're doing the best you can for them, and the forecast isn't just like for fun. You're looking at real things so that you can help people guide their portfolio to meet their goals. And occasionally maybe we say something on this show that helps people that aren't even your client to get a sense of where they should be going, or maybe how their advisors should be helping them meet their goals.
Yeah. Right? There's a lot of opportunity out there, okay, and there's a big number of people that are not taking advantage of certain things, and maybe somewhere down the road we talk a little bit more about that too. So But yeah, looking forward to it as always, though.
So confidence and positive direction and all that. Those are the words for today as we wrap up Taking Stock, episode 42. You have good confidence in what's out in front of us.
I'm growing a pretty nice set of horns. Let's put it that way. So
very
definitely
good.
Definitely on the bullish side.
I love it.
So yeah, I mean it's good. You know, we still have some making up to do. You know,
Sure.
2020 was no fun. 2022 was just ugly. Yeah,
That's
so
a fact.
we still have even after last year we still have a little making up to do. So
Positive and confident.
yes,
Well, I'm confident that we'll reach the goals that we need to make up and maybe achieve some new highs in 2025. But today was a new high because it was, that's the word I'm going to put on it, because we got a nice late start, but we ran through the show quick as ever.
Yeah.
And I thank you again, Art Jarvis. And you know what? And I don't say this often enough. And thank you so much to Jarvis Global Investments for your continued support of not only this show but of Loveland Beacon and local community journalism. So thank you for joining us for this, and thank you to the company for the support.
It is truly our pleasure, and thank you for what you do in the community. So more than happy to support it.
Thank you. And I'll keep trying. All right, we'll be back in 2 weeks on approximately February 4th.
Somewhere in there. Yeah.
Until then, that's I'm going to say this is Chuck Gibson with Art Jarvis saying until next time.
All right. Thanks, Chuck.
Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.